Welcome to Trading Lounge and the US stocks for Friday, May 6th. And well, there we go. It was buy the rumour, sell the fact, I guess. And yeah, certainly puts everything back into bear market sort of territory with things. So I'll just need to shape things up a little bit as we go here. So, but definitely back into the downtrend here with all of this. So it's a little bit annoying, I have to say, but everything's said and done, we should be able to get good positions on things again. So in Apple here, I think the safest, best thing to do at this point is really just to look for 5 waves down here. That will be our trade. You may be short there already based on that green thing here, but I can't remember what we did about that. I was going to remove that, but if you're short, that's fantastic. And pretty much across the board, what we can do now is really look for the rally coming into play here. So will it come back up this high? Well, I don't know, but we can certainly turn that box green, and if it does, then we need to be in that on the short side. However, we also need to look at a few other ways to get in. First of all, and I think the bottom's just about there, but it may not be, but what we're looking for, let's say that's, where are we, 158, there's going to be a slight bump there, and then that'll come back to 156 probably, just knowing my numbers a bit. Let's bring that down, and 160 is going to be a tough spot, but I'll just take it to 162 because of the, oh, it's still quite high, isn't it? It's there. Okay. Could just come to the 160. I'll just take it there, and I'll just pull this over to the side a bit. So what we can do is we obviously can short here. Now that's a long way away, but it may not go all the way up there, you know, that's the other thing. You could also probably, what we could do is we could probably just bring the box down to 160 here, but it might get you in a little bit early, but it might get, at least it gets us in there, you know, at 159.80. Yeah, that will be good. That will be good because of the 8 before the, what's the name, and also too, would be able to also just put a line through here as well. I mean, even if you get in lots of little trades at different prices, so anything like from 58 there, you know, a position at 58, 59, 60 and 61 and 62. 62 is a bit high, but so split the trade up into 4 different prices at moving up here. Anyway, it's just food for thought, but would be looking at this moving down. Let me just get the length of this here for a moment, see where that leaves us here. It's going to leave us on that equality there, so that means we'll get, it's going to be a wave 3 and 4 and 5 here, so we will get a classic trading levels pattern there. So we should see the move down somewhere, and that will be 3, 4 and 5 coming in, something like that. That will give it the extra 60%, sort of speak. And then we can look at wave 4 and then wave 5 to come down about the same. So we should be down around the 140, 45 sort of area there with all of this. So in terms of getting down there, we could just theoretically just take some money off the table at that point and then look to get back in on the bounce here of wave 4, wherever that may be. We'll check on that when we get there, but that can just be our plan. something of that nature, and then we'll be down this side. We can also add under here as well, which will be a good thing to do. So that's what it's looking like. So the thing is that all the markets that they're going to be coming down, we kind of got to get them all to finish at the same time, right? That's the trick, and they'll all have different sort of counts. So that will be our sort of main job over this trend here, is to look at them all. They'll all be same, but they'll all be different. And then we've got to calculate in mistakes, you know, like the Fed chucked one at us, which I didn't probably handle very well, I think. I sort of did okay, but you know, those sort of strong moves that come from news events, they can sort of put you off balance and shake you a little bit. So that cost me in situations like this, getting out here. I did mention that you don't have to get out, but at the same time I had to sort of, you know, protect things. But I figured there was a bearish rally because of the 3 waves here, and then I didn't get us in back over here, which was a little bit annoying. But we've got the same thing occurring here as well. If we can just highlight this a little bit here, bit of noise in the background. It's Friday, it's the rubbish man coming. It's a great service, somebody coming to pick up your rubbish. So we should get back up into that box, which we can also sell, put in green, and it's much the same sort of story really. So in this case, what's this level? That's 23. Well, that's just that previous low. What does that 24 sit at? Okay, so somewhere in here we're going to have something like this, and that's going to give us a classic trading levels pattern there. So we can also look to short, add to the position at that point, draw a line through here, add under here, all the same sort of things, you know. And we can look at this being, this is also looking at 5 waves to the downside here as well. And I may need to adjust this. It's just that it's kind of easier to get things right in the shorter term than the longer term most of the time. But I mean, we always had the target down here for this market, so it could come down to the 18. That would be the next level down below. That line's a bit sleepy. I should have got a new one. Yeah, so how unfortunate of getting out, and because that was a good situation, this one. I can't blame the Feds, I can only blame myself. So the next one is Google. So this one sort of panned out sort of okay. It was once again we had that 3 wave move there, and then 1, 2, 3, 4, 5. So we can just bring that down, and we'll also be doing the same here as well if this one sort of interests you. Looks like it's maybe finished. We'll be able to get this with the S&P 500. So when I do the S&P and the NASDAQ, getting this 5 down here, we'll look at it on an intraday basis. Yeah, we should get down to 2,000. Could be a bumpy ride on the way down. And there should be some sort of move back here. I'm just going to make it a bit of a bigger box, and I'm sort of keeping the 24 in mind there as well. But you can refine all of that. But I need to get back in. We'll just count the waves as we go with all of this. We'll leave that. Everything else is looking okay. So we're basically looking at 1 and 2 and 3 and 4 and 5. I could open that up a bit further. I could put that 4 there. But this is the thing, you know, it's like you've got to pull everything together, even if the wave count sort of looks a little bit different, you know. I mean, the banks have got this as, you know, it counts very nicely as 5 waves up on the banks, you know, which we were looking at yesterday. But it can't be 5 waves, you know, it has to be some sort of other corrective move to the upside. But normally, if I was just looking at it by itself, I'd look at, that's the importance of looking around at other markets, you know, trying to get a full picture rather than just being funneled into, you know, your favourite 3 stocks that have made you the money, you know. Rightio, so next one is Facebook. We weren't too far out on this. We were looking for that wave 2 going a bit higher here. I have brought this wave to sort of count this in a reasonable fashion. I have brought the wave A from, it was up here, I brought it to here, and then put the B wave here, and then looked at 1 and 2, 1, 2, 3, 4, 5, for 3, 4, and 5. And there's 5 waves, 1, 2, 3, 4, and 5 in here. And, you know, there is overlap here, you know, but there's no other way to look at it, you know. Anyway, the same thing here. Let's, here we can see a nice 1 and 2. I can just get that in there. And 3 and 4 here. So we've got the low in here now. So the question is, you know, what will be the strength of the move to the upside here? Will it, you know, come into this area here? You know, should we bring this down? That's 214, 213. $15. I think we'll just bring it down to 14, which is a little bit lower, because the strongest number in here will be the 15. So let's just turn this into the green zone. An army zone. So yeah, that 15 in here is going to be pretty critical, or 5 basically. So we've got, you'll see it go up 1, 2, 3 here, 13 is top of group 1, this is all of group 1 here. So you'll see it go, you know, doing its thing here. And of course 18 up here, I don't think it'll do that. And then we can do the same here again, 8, 5, 3, top of group 1 here. Not that it's a big deal at that point. So yeah, so it's going to be 1, 2, 3, 4, 5. So 1, 2, and then 3, 4, 5. So it's going to come up here somewhere. It's going to be here somewhere. It's going to be something like this. So we can put all our green lines in. You've got to get a position, no matter what happens, you've got to get one little small position above the 10 somewhere, and then under the 10. That's kind of what it's about, you know. I mean, you could get 4 of them in here, and you might be able to get this down again, because this will also come down in 5 waves, and then there'll be a 3 wave bounce here as well. So you could, you know, I mean, you probably think that, you know, why bother with so much detail, Pete? But it's really about managing your exposure, and it's good practice, you know. Like the less that you're at risk all the time, the better off you're going to be with all of this, you know. So have I made a mistake anywhere? Let's It's 1, 2, 3, 4, 5 for 3, 4, 1, 2, 3, 4, 5. I don't want it going any. Now I'm thinking of this number. Like if this just went straight down here because I've made a mistake, and you know I've got us all looking up here, but in the meanwhile, it just drops down here. Then the idea around numbers is like I'll be thinking of 200 here. The idea in the bigger picture is to get some above the 200 and then below the 200. Because this will be where the stops can end up going, above, using that number. So really, in that case, we really need to think about under here. Just needs to be 1 point below that, of course, and then we sort of be thinking over here as well, because the thing is that you can put a position in somewhere, and put your stop there, and that's your risk. And then you're sort of done with it. But if you learn to end up, getting like 20 positions in here, but each one of them has been covered at each time, and each one was a smaller one, well, then you sort of like, you've really worked the trend and you've made the most out of it, Anyway, that kind of stuff. I'm not the most professional person about that strategy. So Microsoft, so we were looking for it to go up, didn't go as high as I expected it to, so it didn't even make a high, so that means that we will need to look at it a little bit differently. We still got our 1 and 2 here. We don't, I suppose we got 1, 2, 3, 4, 5. Sorry, I'm just thinking I'll just have to figure this out a bit, I think. Anyway, I'll just leave that there for the time being, not to worry about it too much just yet. What number is that sitting at? So 3 is going to be the big one. I think we should just bring it down to 2 a little bit, And you try to work it the best you can in that space, of course. Facebook was on its low, so we should see this should be a little bit simpler. Come back and sit on that support there of that previous stuff. Might even go that far up, Definitely going over here. You probably put a line through there. That could be sort of helpful. And the other thing too is that, many roads to Rome, so to speak. So classic trading levels pattern to the downside coming through here. It might just sit here and then drop from that point, but most of the time it goes back above. So we need to sort of work that again in here. It'll be something like this. And it could be something like that, do you know what I mean? But anyway, you'll figure it out. But getting that position in under, you have to wait for the first one to come down and then to go back up, and then you can go to that one if it's there. If this is wave 1 down here and this is wave 2 here, so you could also get it again over here as well. It doesn't matter what you're doing, as long as you know what you're doing and you're managing your exposure, that initial risk on each trade, Keep an eye on that. We'll run 2 counts coming down here for this. And also understand that we're in group 2 here, so 65, 72 and 80. So once the 72 here becomes the resistance, we want to be adding here, and we also want to be adding under the 65 here as well, because that low will be all of a corrective pattern, so we'll be dropping below that. So the 250 is really like the first port of call that we want to be sort of cashing in, so to speak. Alrighty, Tesla. Just going to think about this a bit. It was pretty clear that there were 5 waves down here. So, it's going to make it a bit lengthy, I think. If that's the case, that's going to come down hard. Let's just cruise in. We're on the 2000 and the 1000 and the 100 here. So this was the 2000. Okay, I see what I've done here. Why have I got that there? Shouldn't be like that. That needs to go there then. That needs to go there. Just have a look at this. See, that's coming up into the, that's pullback 61.8% from that wave 2, you know. So that's probably not right. I think I need to come over here. I'll need to mull this over a little bit further, but my indecision won't matter at this point in the game. Probably just run 2 counts in a way for a little while. It's just that this one's a little bit different, that's all, than the others. I'll need to do some work on that, but it won't bother us in the meantime. That will just go back and retest that and then drop down to that. So we had a bullish count on the 1000 tick, so we could just about, I can get rid of this count here when this low here is breached. That would be the bullish count being breached at that point. So we've had this here as, you know, going up for 1, 2, 3, 4, 5 for 1, and then A, B, C back here for 2, and this move up here being impulsive, which doesn't look that impulsive. Looks like 1, 2, 3, 4, looks like 5, looks like an A and a B and a C, and that's okay. But if that's breached, then this count is negated at that point. Anyway, we've just been, you know, keeping an eye on that. Rightio, so to 100 ticks. Okay, so I've got this 1 degree smaller here. Okay, well, that's fair enough. Doesn't really matter at this point, but we got out of this trade too, so we don't need any of this, unfortunately. Yeah, I just need to do some work in there, but it has pulled back up pretty well to that box, you know. I'll just remove that. I'll just keep running with this particular move here, but yeah, this could be a wave 4 here, and it'll make the timing of everything a little bit better. I'll just see also too how, I mean, this should come down, once that's done, it should come down hard, because of, we're in the third of the third of the third here, so and if it doesn't, I mean, it'll come down, but we'll see how far it actually, how fast it comes down. That will help me sort things out too. It's nice that this wave one is basically finished here. Oh, I think it is finished. I'm looking at Facebook. So that puts us up here. I'm just going to bring our sell box down onto the 900. In fact, I think we'll just bring it down to 99 to 98, 98, or 90, even 97, 90 would be good. I'll just put it there. I mean, we don't want to miss it, do you know what I mean? And because it's in the third of the third of the third, it might be sort of quite weak, you know, and get hammered. And I'm really glad Tesla's coming down, because I really want to get some around the 650 mark. I don't know if you realise, but they're bringing out a phone, a Tesla phone, and you could research it on Google or go to watch a video on YouTube, and yeah, it's pretty special. Doesn't matter if you sort of love him or hate him. He's certainly pushing the world into a greener place, which I need to tilt my hat to. Rightio. So yeah, we don't want to miss this. So it'll probably be well, we could use group 2 within all of this, really. Open this up here. That's 80, 72, close enough, and we're in 65 here. So we haven't got 65 as the resistance. It's come through here, gone back up and checked it, you know. So we'd go short here and here. This particular picture here is what we'd want to see over here further. I'll just put this, just a design thing. So yeah, obviously there. So we'll see 1, 2, 3, 4, 5. Look, it might be something like this. I don't know. I don't know what that trend line is. Maybe it's not shaped up right, but it'll be something like this. So, so we can use the levels here as well. So, you know, I like 72 on the, when it comes around the second time, you can definitely use 72 as the resistance to go on, and the 65 here. We want to be drawing a line from that low here through to here on that there. And wherever that may be, that might be further down here. Anyway, you can see that you need to get in and figure out how to manage your risk on all of that. Okay, that's that. So, and that, because it's a wave 2, it should be 5 waves, 3 waves, and 5 waves. So it might come back, test the 72 here again, but there will be plenty of support there for that. And then, of course, under the 50 here as well. I should make a video. The new website is coming along quite nicely, and Alessio will do stock trades, and I will make a bit of an effort to make some new videos on the trading levels and a bit more sort of tactical stuff about, you know, it's okay for me to say short here and here and here, but where do you put your stop, and how do you put your stop, and what are you looking for, because there's always variations of things. So I need to really sort of make that a lot better. And everybody finds their own way in things, you know, and that's what trading is, really. Just grabbing ideas from everybody else and learning and developing your own, you know, because when you've got your own, you know, they're your own, and because they're your own, you've got them through hard graft, you know. That's the good thing about it. So let's get a downside target to this. So yeah, down, definitely down. Look, we may even get lower. If this count is correct here, then this one here should just take us to the 650 anyway. So I'm going to re-go over all of this with a lot of detail, but we'll either come down here to the 650 as, I mean, at worst it would be 1, 2, 3, 4, and 5 down here somewhere, you know. But we'll be looking at Amazon and Apple and all of those as well to find these lows. Just come back to the daily chart here. Just want to check. Yeah, I mean, I think this sort of trend line thing is playing out okay. So we should be down here somewhere for this, you know. And, you know, I have to say, you know, if this is wave one up here, like the banks, you know, wave one and wave two here, I mean, this is just going to be phenomenal coming through here. You know, this is the sort of stuff that obviously there's going to be some big swings in the market, but they'll just be sort of opportunities, you know. It'll be stuff like this, you know. And then in this one here, there'll be, you know, it's not as easy as you think, but I think in this is definitely from this, if you get in down here, then the trade shouldn't be just the normal stock trade to the end of the week or something like that. It should be a hodling situation where you're holding it for, you know, until this wave 1 and 2 here and 3. Once that wave 3 is finished, we don't want to get stuck in that degree of wave 4, but yeah, I mean, even this will be primary wave 1. Even if we go to primary wave 3, that's going to be, you know, that will get the whole family some Teslas, you know. And a watch. We'll throw in a watch. Okay, so Square. So there's a couple of things that this sort of panned out okay. That's one thing. Got one thing sort of right. Yeah, I was looking at this count in a different way because, as I mentioned, I'll have to look at PayPal and the other guys again as well, Shopify, and see how they're doing. I mean, they're getting really these payment gateways are really getting hammered. I don't know why that is. I don't know if it's because of the Lightning Network coming on the Bitcoin platform. I don't know. I doubt it. It's too early for that. But yeah, we need to be down here somewhere for this. We need to take that low out, as I've mentioned a few times. But this particular structure that I've got here is maybe it's not quite right. So I think that this is 1,000 ticks. So I think I had a different count on the 100 ticks. So let me just check. Oh no, it ended up being the same. It wasn't different. I thought I was different. Oh well, we'll see. I'll just go back to my 1,000 tick because it's where we've been putting the trades on this. So I'll just just keep at this for a moment. I'll just copy that and we'll put that under there. But the same thing goes here. We need to look at this. So the 50%'s right on there. So I'd be selling it just before I'd be shorting it just before the 50 if that's the case. So what I'm going to do is I'm just going to bring that down a little bit there just to make sure, to be sure. It has to be down here somewhere. Maybe it'll just go shy of that in the first instance and then do something like that and then down. Anyway, see, sometimes it doesn't work doing that because the B wave comes back down too low, but that's the safe trade at that point and there. The other thing here too is, like, if you can get a position at 98, that would be good too. So anything above that level would be good. Anything at 100 would be good. Anything at 98 would be good. And then we've got, well, we had to put them in here, we've got 95. It's close enough for the time being. And then 3. And so on. Anyway, try to get a heap in here if you can, see how you go with it. The A wave is normally sharp and the C wave is more lazy, so look for that. You know, if you see the C wave being like sharp, just as sharp as the A wave, then just hold your horses a little bit, you know, and be a bit patient and allow things to play out a bit further. Okay, so for the banks, yesterday when I was speaking about this, I was trying to figure out how to get a low in place here, in case we did have a low in place for the markets, but I just couldn't figure it out. You know, I'd have to sort of squash things up and all the rest of it. So we're sort of back on this bearish track here for this. So I can bring that back down here, and yeah, so I'm happy with 1, 2, 3, 4, 5 for the A wave, the B wave, and then 1 and 2. I'm happy with that, and I'm happy with 1 and 2. I may have got it a bit wrong in here, and I might need to do something else in here, but still looking for 3, 4, and 5 down for the third wave, the fourth wave, and the fifth wave, which is going to be a little bit longer than the Amazons of the world. So, but this is the thing, I've got to kind of bring them all together a little bit, you know. Because when I think about this, really, I know when I look at this here, that's 1 and 2. From this point, we're not even halfway through yet, you know. Once this drops down through here, we will, of course. But anyway, let's go to 10 ticks and rearrange this. So I need to put that there as 1 and 2 here. But it was like yesterday, I could count this up as 1 and 2 and 1 and 2 and 3 and 4 and 5 here for the third wave, fourth wave, and going up for the fifth wave, you know. But I can't do that now, you know. I have to look at it as some sort of A, B, and C at this point. Maybe there's another way to count that, but we need to plonk that wave 2 there for the time being. We need to look at, probably not need to lift this up 1 degree of structure, but at this stage it will be okay. And that seems to be a bit more advanced in this move to the upside. Let's just it's a bit too advanced than the other ones. The other ones are just in here at the moment, you know, or maybe even in the first leg here. I think for this one here, just in case I'm wrong, we'll short it under here, under the 7. We're in group 2 here, 65, 72, and 80, so 36, 50, 37, 20, so on. So anyway, I'll leave that up to you at this point, but that's where we should be. Once we're below this 61.8%, that will be fantastic. And also to this 36.50 here, we want to short here. And you will end up getting it, because of that consolidation over there, you will get a pattern like this, and it's good practice to work it. So there'll be the arrival, the reaction, the first low below the level, the ABC that can come back above the level, and normally does. Very rarely does it, not very rarely, but you know, it happens quite a way. It just comes to here and drops again. But you never miss out, because we'd go short here and go short here. But if it pops up there, then you've got to kind of start the whole process again. So the first move down is the arrival, and then there'll be a reaction in here, and then there'll be the first low below the level, and then there'll be an ABC back up here. So you can just keep refining it, and then you'll get to the stage where you go to yourself, well, if that's on 5 waves, and that's 3 waves there, if that's just 3 waves there, then you know, perhaps I could sell it up here or here. And then you go, oh well, I'll check the volume, you know, because if you see this move coming up here and it's on lower volume than that move coming down here, then you'll know that this move is corrective, because corrections are on lower volume than the impulse wave, unless you're in a 5th wave or something. It can be lower volume at that point. But yeah, generally speaking, that should have increased volume, that should have decreased volume. And you could also just look over here as well, because the fingerprint will be over here. Increased volume, decreased volume, increased volume, decreased volume, increased volume, decreased volume. And if you can't see it in the time frame that you're in, just keep going out to the next one. So if you're trading, you know, a 5-minute chart, you can't see it, go to a 15-minute chart, and you know, then a 30-minute chart or whatever. But you need to also understand too that you know, using a tick chart is better. Well, you know, if you're trading futures contracts, for example, then you know, and you got it on 50 ticks, well then you know there's 50, you know, contracts in that space, so you know exactly what's in that bar, so to speak. It's not based on time. But with a time chart with 5 minutes or 1 minute or 10 minutes or whatever, there could be any, it's based on time, there could be any amount of volume within that space, in that time period, you know. Anyway, so that's BAC, and this, we didn't really look at JPM yesterday, but they had the same thing again here as well. I couldn't really just finish it. Oh yeah, I could look at A and a B and 1, 2, 3, 4. No, I couldn't, because I could go to 5 here, but we had this leg here. So this will also, you know, make its way down here now as well. Slightly different count than the other one we just looked at. This has got an extra little sort of leg in it so far. But let's go in and have a look. We didn't really look at it yesterday. Or did we? Yeah, I might have done. Anyway, I had it that, so that's a, no, it didn't change anything here. But once again, it looks really nice, like a little 5-wave structure up here, a little bit dodgy in here, but we could probably resolve that. But certainly got that got that 5-wave look about it. So this is good, because this is also the same as the other bank as well, is that it's 50-60% retracement, and that means we can short it under that. So if that's breached, that can be the short. I mean, this is like 1, 2, 3, 4, 5 here. Nice little A wave, a B wave. So yeah, I mean, you could sell it higher, but based on that, I just sort of go, I don't know about that. But then the bigger picture tells me it's bearish. So maybe it's just me being a scaredy cat again. But if you did sell it up here because you like the banks, or you sell it because you don't like the banks or whatever, then just keep it small, you know. Should be 5 waves in there, but it's just a little bit more advanced than the other ones. Also look to add to this too. This is group 1. I mean, obviously we've got, just go over this a little bit, the 100 is a major trading level. Then we've got the minor levels 1, 2 and 3 that make up minor group 1. And then when we expand this up here between 2 and 3, we've got the Fibonacci sequence again, 1, 2, 3, 5 and 8. And the same between this one as well, 1, 2, 3, 5 and 8. We've got group 2 in here, 65, 72 and 80. I haven't put it in here. So when you're coming through group 1 here, you know, it's really all about this number here. So when the market comes down here, when this number 2 here becomes the retested resistance, then you know that it's not going back up at that point. It's going to be pulled down to, everybody will be thinking about this number, and it'll be pulled down to that number, and then eventually this number will become the resistance. So you know, when you see the number 2 here become the resistance, you could look to add at that point. And then you can also look to add under here. You could probably even add in here, you know, to get to get sort of minimum of 4 trades in this first leg here below this one here, because see, once that becomes the resistance here, like I said, this one in here, the number 2 becomes the resistance here, will be pulled down to that one. When this number here becomes the resistance, it will be pulled down to this one. So when you think about that, then you think, well, shit, you know, if I can get 4 trades in here and that becomes the resistance, then I can start building in here as well, you know. So you can end up with a lot of trades in through here once you learn where to put the stops, manage that risk, you know. And less is more, you know. I mean, it's just less is more. But a lot of people that have got a decent large account and they're new to the market, you know, they might have an account of, you know, I don't know what you call small or big, but, you know, they've got an account like they just tend to overtrade because they're not getting an emotional hit by putting in, you know, just a few shares, you know, whatever that means to anybody. So, you know, yeah, okay, so anyway, that's it. So I'll leave it all at that. Well, that was a long video, wasn't it? I don't mean to make them that long, but I start yakking and I don't stop, so apologies about that, but there we go. Okay, cheers.